What's up, traders? Today I bring to you another great trade that we took in the stock market today. And today's trade was a little bit different than most of the trades we take on this channel. So I'm going to show you exactly what my thought process was and what I did, what I saw to get into this trade. So let's jump right in. Starting on the longer time frames, we know that we are in a downtrend, so the momentum is to the downside, which means we are favoring shorting this stock, the S&P 500. I'm not looking to go long in demand zones. I'm looking to go short in supply zones. Now, today we actually didn't short in a supply zone. We actually played a little bit more momentum based off of the open. So I'm going to walk you through the trade that I took. Before I get into that, actually, I just want to mention that today I assumed would be a trend day, which means we would have a larger move to the downside versus a sideways action balancing day. And the reason why I thought today would be a trend day is because we had this very, very aggressive move to the downside. And then in yesterday's session, it was a sideways day where we traded up and down all day long. Now, we could have done the same thing today, but the chances of having an aggressive move to the downside today was actually higher than yesterday because we had that big down move. Then we had that consolidation that we need to continue going down. So today, there's higher chance that we can have another large move to the downside. And that's exactly what happened. This candlestick pattern that you see right here is called a bear flag. So you have the flagpole, then you have the consolidation, and then you have the continuation. And it's essentially what we played today. If we zoom in a little bit more to the 4-hour chart, you can see we identified this downtrend channel, which we started the channel from here to here, had this downtrend. We bounced off the bottom of the trend, which is where we drew our channel, and then we retested the top of the trend line, sold off aggressively, broke down under this extension of the trend line. And what usually happens is we'll break out, we'll kind of retrace back into the trend channel, and this bottom trend channel extension actually acts as resistance. So we break out of the channel, we kind of attract back towards the channel, and then this is a point of resistance. So looking at the 4-hour, let's just look before this candle formed. You could see this just looks like a bear flag. It looks like, okay, we had a move to the downside. We had a little bit of a retracement, but it wasn't strong enough to actually be bullish. So eventually, this little retracement is going to break back down towards the downside, which is what happened. And essentially, right off the open, I decided to buy SPY puts, right here, just because this candle right here was showing momentum to the downside on the larger time frames. So this trade was solely based off of the larger time frames and just that momentum. I wanted to see that momentum continue, retest those lows, or break through those lows. So for the trade that I took, I decided to buy the 395 SPY puts because that was the next demand zone right here, 395. That was my target for this trade. I was assuming that we would have a large downside move, retest these lows, break the lows, and just continue that bearish momentum to the downside. So I bought the SPY puts right off of the open just because I thought today would be a trend day. And what happens in a trend day is right off the open, you'll just trend in one direction and continue trending. So I bought the 395 SPY puts right off of the open. I got them pretty cheap, around 45 cents, and just held these until we were in that demand zone that I targeted, 395. So these returned about 370% on this trade, which is phenomenal. That's, I believe, 3 times your money. So you put in $1,000, you get back 3,000, right? So pretty good trade. This is a good example of what a trend day is and something to look out for in your trading, because trend days don't happen every day. They actually happen less often than a sideways day or a balancing day. So to make sure that you're aware of a trend day and when a trend day can happen and identify it before it happens can really set you up for success as a trader. Now, trend days happen about 30% of the time. So 30% of trading days will be trend days. So like I said, they're not as common as balancing days. So when there is a possibility for a trend day, you want to make sure that you position yourself on the side of greatest momentum. And the only way to identify which side has the greatest momentum, whether it be up or down, is to look at the longer time frame charts, such as the daily chart and the 4-hour chart. So I hope this helps, guys. If you learned anything in this video, I would appreciate if you hit the like button and subscribe if you want to see more trading recaps and more trading content. I'm thinking of doing some other videos that are more informative. Also, I have created the Discord channel, so we've had some members join the Discord. And shout out to all you guys that are in the Discord channel. I'm telling you, I have something big planned for this chat room, this trading room. It is 100% free to join. So if you would like to join the Discord, the link is in the description. And you can just click that, sign up for Discord if you need to, and join the chat room. I have some big things planned for this chat room. And if you have any questions, you can reach out to me there as well. But I think I'm done trading for the day. We had the big move that we were all anticipating. So I'm going to go enjoy the rest of my day. I hope you guys enjoy the rest of your day. And I'll see you tomorrow again with another trading recap.